All right, so line of credit stacking, this is for businesses that are 2 years old with or without financials, okay? I highly recommend you watch this one first, by the way, credit stacking, because it's the same exact pattern. Same thing with this, it's the same pattern as this, and this is the same pattern as all this, okay? It's the same thing, except there's a couple of differences, and you'll see as I go through, right? The 680 is still required. We're still going to regional banks. You still need the seasonal profile, right? This is the ideal credit profile that I've gone over multiple times already throughout the course, right? You can look here, okay? And again, the most important thing about this is they have to be primaries. They can't just be authorized users, right? And then if you are above a 680, but you may have a negative item or any of this, you might be able to get approved still, okay? But again, I've gone over this funding profile many times, so I'm just gonna skip it and get to the actual strategy, okay? And again, we're still doing different credit bureaus, figuring out their lending thresholds, and now we're figuring out whether or not they will put a UCC1 lien and if it's secured or unsecured, right? And so really this is where I explain it. So secured means the lender requires some sort of collateral, right? They could say cash, real estate, equipment, receivables, inventory, all kinds of things, right? Business assets. And basically, I mean, if it's a secured if it's secured by that asset, then they can just take it in the form of a default, right? It just helps lower their risk, and it just shows that you're actually trying. Like, you need to give and take in these scenarios, right? But that's what secured lending is. Unsecured, there's no collateral, right? They don't require any of this, but there's a caveat to unsecured, because even though it's unsecured, sometimes what they do is they'll file a lien. So instead of it being a very specific asset that they're putting the lien on, making it a secured product, they'll say this is unsecured, but we're going to file a UCC1 blanket lien. And basically that just gives them it gives them a claim on the whole, like all the business assets, right? Because it's just a blanket lien. And this isn't a bad thing. Just know that generally you want to save it till the very end, okay? If you are going to take a line of credit with a lien. And I will break it down here as we get down, okay? But basically, this just allows them to skip everything because, like, let's say it's a 100% unsecured, no lien, then generally the only remedy that they have is they can't just automatically liquidate everything from you if they don't have a lien. They would have to go through the court system, right? And even then, sometimes they're not even able to get through the court system because either it's just not profitable for them or it's not worth their time, right? And that's another reason why personal guarantees, like, they are and aren't a big deal, right? You want to be responsible, but at the same time, like, this is the reality that they have to go through. They have to do a lawsuit. They have to pay lawyers money, right? And sometimes it just doesn't make sense to do that. But my point, though, the main thing is the UCC lien gives them first dibs on whatever it is that the claim is on. Okay. And what makes it secured is they may put the lien on a specific asset. So, like real estate or the equipment. So, if you default, let's say it's a bunch of kitchen supplies. Well, they're going to take all the kitchen supplies, right? And then that's it. If they want anything else outside of that, then they have to go through the court system, right? And this is what unsecured does. But when it's a UCC1 lien, since it gives them a full blanket lien, they can move a lot faster on liquidating, right? If it comes down to that. Now, um, the financial full doc lines of credit. This is usually when you're asking for higher limits, okay? And they're gonna ask for like your tax returns, P&Ls, balance sheet, and you can get anywhere from like 100, 500,000, even more than that, right? But they're gonna ask for financial docs, and also keep in mind after you hit like $250,000, aside from the financials, usually that's when they're also gonna make it a secured product. Okay, so 50 to 100,000 stated income unsecured, and then over 100,000, you would still probably get an unsecured line of credit, but they might say it's full doc, right? So 100 to 250. But then for sure, once you start requesting 250 or more, I've noticed that almost everywhere aside from wanting full doc, they're going to also say we want to go ahead and secure it with either real estate, equipment, some sort of collateral. Okay. So I hope it makes sense on what I'm explaining. Try not to get too hung up on this. Just know that UCC liens, like the UCC one specifically, is usually most common with unsecured. And I'll break it down as we go, okay? And this is what I'm saying here. So usually 150 to 250, really it should be 100 to 250 unsecured, right? Over 250, usually secured. Okay. And this is what I was saying about the thresholds. This is why we need to know the lending limit thresholds specifically for the lines of credit. Okay. And this is when I tell people when it's okay to accept a line of credit with the lien. Sometimes it makes sense if they're going to give you a higher limit, right? If I mean it's all personal preference as well. But if someone's giving you 500,000 and that just is what you need, then maybe it makes sense to do that, right? Especially if your tax returns support it. But if your tax returns don't support that line of credit or you just don't have it, then maybe get the $50,000 line that doesn't require the lien, right? Really, the people who are going to be wondering whether or not they should get a line of credit with the lien would be someone that can get these bigger lines of credit, right? Over 250. It's all, and basically, if you are going to take one that requires a lien, save it for the end of your stack, because once the lien is active, you're effectively maxed out for new business funding, okay? Or save it for like the second one, so like you can actually get the approval. Because remember the inquiries, right? But anyways, building your line of credit stack. These are the two most common ones. This is the easiest. Unsecured stated income lines of credit, no collateral, no lien, no financials required, heavily based on credit, faster approvals, right? And this is ideal for people that don't have their returns or more mature financials, right? And usually it takes them about 30 days to underwrite, 30 to 45. Once you go full doc, it it all depends on the amount. Sometimes it can go anywhere from 60 days of underwriting upwards to a couple months, okay? It all depends on the amounts. But now this is the most common setup though. No collateral or lien, right? But they require your financials. Still requires a 680. And again, they come with higher limits. And this is best for businesses with clean deposits and clean books, okay? Now, we're targeting regional banks and credit unions, and it's because they have easier underwriting, okay? These are the main questions you want to ask, but I have the line of credit call script here where you can build a more in depth stack, right? Okay, get more information. And then the lender list here, this is for you to actually fill out and collect your data, okay? Hold on just a moment. There it is. I don't know why it wasn't loading earlier, but basically for you to start tracking. Anyways, so you gather your verified data points. This is really all you need to build a stack. So which bureau they pull from, is there a UCC, is it secured or unsecured, and their approval limits and what they require, right? So use the line of credit stack, but again, these are just the questions that you want to ask generally. And then when you're building your funding sequence, just a moment. So when you build your funding sequence, organize your list in a stack, right? Your goal, each bank pull from different bureaus, and then each bank should provide the type of products you want. The ideal three Experian, three TransUnion, three Equifax. Oh, almost forgot to mention one thing. A lot of these places underwrite their own line of credit. That's the thing. So where business cards, they usually they a lot of times they have third parties that underwrite. Almost always they underwrite their own line of credit. And in the hybrid stack, I'll let you know how you can do both, right? But again, right now, just know that with the line of credit, a lot of times it's just the bank itself underwriting it. So you don't really need to ask them who's underwriting or who the issuer is, right? Because it's the bank that does it a lot of times, okay? So this is what you need for the funding stack, and then you apply in a sequence, okay? So start by opening, and this is another difference, is generally you want where it's optional to open the business checking account here it's required. You need to open the checking account first with all the banks you plan to apply at, right? And then what you can do though is you can just do the minimum opening deposit, but if you're able to do large deposits, I recommend you do that because it does help. It isn't required though. After you open the accounts, and when you're opening the accounts, one other thing I forgot to mention, try to keep it just general and broad. You don't have to get into the details of things or try to sell them on why they should lend you the money, right? Really, just get in there, open the checking account, and then the really like you should just ask them, like you should just provide them what they require, because with business funding, they can just deny you based on not even just necessarily your credit, because it is not a consumer product. Those consumer protections are for consumers only. So if a underwriter just has a feeling or has a thought that you may be an irresponsible borrower, they can deny you, right? But if they were to do that same exact underwriting strategy with like a personal mortgage, right? Well, that's illegal. They can't just do that, right? That's highly illegal. They have to go through the full underwriting process, and the numbers have to tell them basically whether or not you qualify. With business funding, even though that you could qualify on a credit basis, if for whatever reason they just don't like your character, they can deny you based on character. And it's not something that I like about business funding, but it is something that you should be aware of. Because if you ever go to a bank and you wonder why they're not letting you apply or for the business product, or they just outright deny you, it could be because of how you're presenting yourself, right? And that's why I created these call scripts. But anyways, my point, doing this here will prevent a lot of that by simply just opening it and getting the relationship started. Now you it's the same setup. Experian banks first, right? Or whichever bank you want to go at. This is just an example, right? So apply at Experian banks, then TransUnion, then Equifax. If any require a lien, save that for the last in your stack and save the extra inquiry for the bank so that you don't get denied for too many inquiries. Okay. So for example, I may get two Experian banks, and then the third one may require the lien, right? So I'd say, okay, let me just go finish up my TransUnion and Equifax banks, and then I'll come back and finish Experian at the very last, at the very end, right? Because they have that last bank has the lien, right? Again, don't submit everything at once. Apply one at a time. Wait for the first lender to complete their credit pool before you submit to the next bank, right? So they pull the credit, boom, go to the next bank, right? And 3 inquiries per bureau, right? That's the sweet spot. Sometimes you can stretch to 4 or 5 on one bureau, but you can get usually it ends in auto denials. This is enough to get 50 to 150,000 in approvals. Of course, if you can provide your financials and you do a secured line of credit stack, like a full doc or one of these full doc unsecured line of credit stack, right? You can get a lot more than what the average is, right? I've done a stack, and this isn't typical results. It's just that the state the client was in and all the lenders we had available, we were able to get them up to like $1 million in lines of credit, and it's just because we followed this same exact strategy here, right? On what bureaus they're pulling, whether they require the lien or not, etc. Okay. And again, you're probably, it takes some time to really dial it in, but this is enough really to get 50 to 150. Okay. Now, this is what I mentioned. Only answer the questions they ask you. Do not volunteer extra information, right? People get denied all the time for talking too much. And again, I don't like it, but because it's not a consumer product, they can get away with having feelings of, they don't have to have like proof that the credit profile wasn't fundable compared to like a mortgage. If they deny you for a mortgage, a personal card, any sort of personal product, they have to have proof as to why, and it cannot be because they felt like it, or because then they can get accused for all kinds of things and violations, right? So again, only answer what they ask you. Keep your funding log, right? And this is like what I have, right? Oh, hold on. I don't know why it's doing this. Hold on. Anyways, so this is the actual like a funding log example, right? And as you can see, like if I was to do a stack like this, I would pick, for example, one Experian bank, no docs, right? Oh, Equifax, they required some documents, bank statements. Now, this one could be that they will approve me for a larger limit, so I may or may not add them to my stack, right? But the main thing is like if you just want to do a no doc stack, then there's First Citizens, Experian, Equifax. Okay, that's an Equifax. TransUnion, because they're all three different ones, that would be considered a stack, and that can easily get me like 150 if they each get me 50,000, right? Or I can do all Experian, right? So these three here are all Experian, and again, I can just do only Experian. But you see how like you can stack this. Not all of them. Oh, and this right here, this is primarily for the credit cards, by the way. This is for the lines of credit. But anyways, my point though is that with something like this, you can get what you need, right? And then the only difference between like a full doc lock, right, is that they could be approving you for a lot higher limits, right? And at that point, when you go full doc, the only thing that changes is whether it will be secured or unsecured. But it's very similar, like how I did the stated income stack here, is how you do an unsecured stack. The only difference is that make sure there's no lien, right? Or you can do a mix of both of these, right? You can mix and match both. Like I could go stated income with one bank and then my last bank full doc, right, secured with a lien, or unsecured stated income and then full doc lending with unsecured lines of credit. You see what I'm saying? But if you follow the general structure, you can start to spot patterns on how you can submit your applications, okay? And again, if you just go through these videos, you're going to see the pattern that I'm talking about. And a lot of this you're probably going to have to do, right, to be able to see like if you can get the approvals that you're looking for, right? A lot of it's experimenting. You're not going to get it down the first time. However, I know that the more you go into this and really like try to figure it out, you'll be able to get it down. But this is like how you stack, right? And now next I'm going to show you how to do both. And this is how you can get double what people advertise, right? And this is like what I do, the hybrid funding strategy. That's what I'm really good at.